All right, so maybe you're coming to this video and you haven't had the best results when it comes to investing. Maybe you're making just a little bit of money, or maybe you're not even making any money at all. And I have to say that no matter how you're feeling, you are not alone. And when I first started investing, I learned pretty quickly that the strategy that I was going about, what I was trying to do, wasn't actually working. And I needed to quickly adapt to figure out, I want to build wealth. This is where I want to be. I want to be able to be financially independent. And it was really important for me to get a grasp on this early on when I started investing. So that way I could actually build the fundamentals and get the snowball rolling to grow that wealth. So in this video here today, I'm going to be talking about that strategy that I used to adapt, what actually led me to that point. But then I'm going to go into the details about how I'm actually going and finding the right investments, picking the stocks that I'm investing in, and go into more details on that. So without further ado, let's jump right in. All right, now listen guys, if you are brand new to this channel, you've never been here before, well, my name is Dalton. This is D-Lits TV, and on this channel, we talk about all things investing. And I think the best way for me to segue into this video is tell you a story about myself. The very first time I started investing, I had $200 and I was in college, and I was like, you know what? I'm gonna invest this money. I'm gonna make thousands of dollars off it. I'm gonna be popping off. Everything's gonna be looking great. And boy, was I wrong. What actually happened was I did turn that $200 into $700 and then quickly into $1,200. But then the next penny stock that I invested in dropped, it got delisted, and I ended up losing almost all of my money there. So it was a roller coaster to say the least. And then from there, I decided, you know what? I was pretty good at it. I'm going to start picking other penny stocks, and eventually ended up losing even more money from the stock market. So I quickly kind of needed to adjust my method, figure out, you know what? I need to understand, how do people pick stocks? Where do I go from here? I hate losing money on the stock market. I need to figure this stuff out. And I've always had this goal where I want to retire early. And by retire, I guess I just mean be financially free, where my passive income is going to cover my expenses. And I'm trying to do that through dividend investing. But anyways, let me step aside and let's talk about how I started to change, what I started to implement in terms of buying. And the first thing that I really started doing was investing into companies that I actually used. So if you go into my portfolio, you're going to notice that I have a lot of known companies, a lot of names that most people are going to recognize. You know what? I got an iPhone. I've also got a Mac computer and some AirPods. So Apple was a really great company that, off the bat, I knew I believed in. And so I think that if you own like an iPhone, or if you own anything like that, you ought to consider maybe it's worth having an investment into the company. Now, with Apple in particular, they have such a big market cap. When I look at companies, I don't look for companies with the market cap below $1 billion. I pretty much throw them out the window, don't even consider them, because to me, having that $1 billion market cap is a more stable income level, and you can, get a lot more established financials based off of that. You look at other things like the earnings per share, you look at management style, and with Apple, for example, you know that they're always trying to innovate, come out with the next new thing. So you got iPhones, iPads, Macs, the generic line, but obviously they're branching into Apple Watches, AirPods, the bigger ones that go over your ears. They're going for electric vehicles in the future. And obviously they're an innovator and a market changer. And I don't see that going away anytime soon. So for me, a company like Apple lines up perfectly, because not only do I use their products, their balance sheet looks great, but also what the future holds for them is amazing as well. And that's obviously my own opinion. And you guys, you don't want to copy somebody online who's talking about this stuff just because they say a name of a company. I'm not a financial advisor. You definitely want to do your own due diligence, and all of this stuff that I mention in these videos are completely based off of my own experience. And so sometimes when I'm thinking about what investments I want to make, I think about, all right, what am I doing on a day-to-day basis? What kind of products am I using? And do I see innovation with that company in the future? future. So for example, my camera I record on is a Sony. I know the PlayStation is pretty popular. Do I think Sony is going to continue to innovate, or do I see their company not doing so well? So that's like another indicator on why I might start looking into some of these companies. Now, as I mentioned, they need a decent market cap as well, but there's other things you want to consider. I myself love dividend companies. Those are companies that actually pay you and incentivize you for being a shareholder. They're actually going to pay you a portion of the profits if their company is doing well. And that's money in the bank right there. It's really nice to have that stability. So even when the market drops and prices aren't looking great for stocks, you know you're getting a stable income from dividend investing. And honestly, if you're jumping into the stock market and you're trying to pick individual companies and you are not having a good time and you're losing a lot of money, one of the best avenues that you can go after is just simply investing in a market tracing ETF, which essentially does what it sounds like. It traces how the market reacts. So one of my personal favorites and one that I'm investing in myself is VTI, Vanguard's Total Stock Market Index. And when you invest in something like this, on average, your annual return is anywhere from 6 to 12%, and it's looking really good. That's consistent. If you look back at the history, that's the other thing. When you're investing in stocks, ETFs, anything you're investing in, you want to look at, at least 10 years of their financials, 10 years of their dividend history, 10 years of their company history, just looking at all of this different information that you can take in and make more of an educated decision. Now, for me right now, what I love to do is identify different stocks to actually invest in. And I've stepped a little bit aside from that because my goal right now is to invest $6,000 into my Roth IRA before April 15th. So I'm making that a big emphasis. And within my Roth IRA, I'm only investing primarily in VTI and an international index as well. So I'm putting my money where my mouth is. Like when I talk about this stuff, this is exactly what I'm doing, and I offer full transparency. Now, I've talked about in several different videos the Roth IRA strategy, which I think if you're just getting into investing and you don't really know what a Roth IRA is, definitely go figure it out. I've got several videos on it, but I know there's a lot of great resources out there. It's one of the best ways that you can grow your money completely tax-free. And so my point is that I typically will, do some stock analysis, look at different companies, individual companies out there, but if it ain't broke, don't fix it. I'm going for that stable return in my retirement account, such as tracing the market. So that is what I'm basically aiming to beat with my other portfolios, but it will be my stable kind of nest egg for when I do decide to retire. Now, one more thing, you guys, I love identifying stocks and looking at them and going into details about it and sharing what I'm actually investing in. And I typically I share what I invest in with you guys as I'm making the investment, but obviously that's kind of been put on hold as I've been putting more and more into my Roth IRA and going after VTI. Now, another thing that I want to mention is that a lot of people will ask me, what do I think about X stock and Y stock and Z stock? And honestly, a lot of times that people are reaching out to me, these stocks are ones that I wouldn't necessarily consider. Sometimes they're a penny stock, right? I don't even really consider penny stocks investing. Like for myself, it just does not align with me. It has not worked out with me in the past. The other thing is they'll send me these companies with extremely high dividend yields that are unsustainable, and they'll ask for my opinion. And a lot of times these are dividend traps where they're trying to incentivize investors by offering a really high dividend. They're not able to sustain that dividend. They ultimately cut it, and oftentimes they get rid of it completely. So it's just that's the way that it traps you in there. Now, one thing that I do want to say is that when you're looking online and you're trying to figure out, a lot of people who just start investing are starting as like sort of a get rich quick type of thing. Now, the thing about investing is when done properly, investing, guys, really, if I take another step back, investing, when it's done properly, it's going to take a while to build your wealth, but once you get it going, it's going to snowball and grow extremely quick. So for example, with dividend companies, what happens is you're paid a dividend, you can reinvest that dividend, and on top of that, the company could actually gain value from the stock market in general. So there's a lot of money to be made, but people oftentimes jump in and want to make money right away, which just in most cases isn't realistic. Now, it has happened in the past, but it is extremely hard to do. And a lot of people are intimidated by the stock market and they look at it, they're like, man, it's at all-time highs. Well, news to you, the market has been at all-time highs for like years. And what's crazy is that nobody knows when it's going to drop. Nobody knows when all of this stuff is going to happen. I mean, we saw the COVID dip at March of last year. A year later, we're at all-time highs, but we're still, in lockdown and all of these different things are happening. So it's just like not logical in every sense. So the way that you can beat that is just to think outside the box and go after those companies that you think are going to do well. So for me, for example, I'm starting to think a little bit post-pandemic as more of these vaccines are rolling out, as more things are happening in that front, and things start to open back up. What companies are going to do well? Do you think people are going to be going on cruises now? Do you think people are going to be flying more? Do you think this is the route that kind of goes with my mind and how I start to think? And hopefully, in return, in the future, I'll be able to get some decent picks from it. And so anyways, guys, that's really all I have for you in this video here today. If you did take anything away from it, I would greatly appreciate it if you just hit the like button. It means so much to me. It gets this channel out on other homepages. It just promotes me, and all the support you guys show me is greatly appreciated. So anyways, thank you so much for checking out this video, guys, and have a great day.